Welcome to TradeTheNBI.com. This is John. This report is for the 26th of October. Well, we broke out to those new highs the other day. It's continuing. Well within our expectation when we had the magenta in that at this level. However, history tells you that within usually a week or so, or as soon as that magenta dips back below, you end up with a decent dip. Last time it happened, we had the highs here, and then we made new higher highs on lower, and that led to the most recent drop. But you can go back through the history of it, and it can sustain itself in that condition for a little while, but then it usually reverberates back to its original breakout point. So worth noting for those that start to see that happen and want to have their put protection in place, just as an anticipatory setup. From an NQ standpoint, you can see it's much weaker, similar readings from MBI, but hasn't quite matched the previous highs. Interesting to note, daily having the white in negative territory, both on the S&P as well as NASDAQ here. It really presents the extreme nature of just zero short activity, really taking any action whatsoever. It's sort of that year-end, always push to higher, sort of just back off, but earlier than normal, and that's simply because inflation, Fed taper, oil prices, all of it. You can see the euro still not going anywhere as expected. Oil still remaining up. Will continue to break into new highs, even if it doesn't finish there. It's still pressing the higher envelope, and those costs are starting to have their ripple effect, notwithstanding the supply chain disruption issues. Treasuries also continuing. It hasn't really pushed higher yet, but I think if you start to see things continuing to deteriorate that way, there's really not much room for it to go anywhere but higher rates, simply because a function of market dynamics. From a Bitcoin standpoint, it was interesting. I posted an article about the latest ETF from ProShares and how it skews favorably to the downside, and it's something I talked about before, that creating both the futures way back in the day was an opportunity for hedge funds and things like that to be involved in Bitcoin without actually having to get involved in the messy nature of actually having the Bitcoins. And it always skews profitability wise to the downside, and it's something we pointed out in our performance reports that we put up related to it, because they tend to outshine on the short side, in this case, significantly higher. So it makes a big difference in why these things are created and what they're really for. The relative value of Bitcoin associated to it doesn't really matter. It just means that the profitability for being able to take the opposite side of the trade makes a huge difference. Just gives that much more of an opportunity, particularly when there's inequities in place. From a 50K standpoint, of course, it had been buying the long setups. Had a couple of oddities, a little drop there. The secondary GAM setup traded out of it a little bit later for a profit, where the other one took a little bit of the loss on that first setup, and then just has continued to buy these additional setups. So from that standpoint, no shock. Again, look at how tiny that range is from a 50K, so you're breaking out into new highs on low volume. I think that's kind of a signal. And without short activity, that usually is what happens, is why it's been kind of painfully slow these last few days. Will that start to ramp up? There's going to need to be a catalyst yet, where previous months where we could see volatility building, everyone's seeing remarkably low VIX readings, and that not necessarily precursor towards people just think that because it gets low it's got to jump up eventually. Doesn't mean it's going to happen right away. You have to wait for a catalyst that does that. From an intraday standpoint, really what we saw was just positive shakeout pretty much throughout most of it. Even the minor decline, all it did was fill back the positive extreme intraday. once that came up, and really all the dark green dots with the cyan under red DOC. So still within that always buy setup. Only until a little bit later did it finally start to seesaw back and forth. But by the end of the day, you ended up with that push back up, and still within that overall buy signal until you get that cross of white back over the red. So despite the fact that it's presenting with the potential for a pullback, is still within a broader bullish configuration overall. So it's generally where things are at now. Of course, as it continues to build new positive extremes, which all of this move is under, that would take us back to the beginning setup right there, around 59. For potential retrace, and of course there's a couple others in between there. So that's what we'll be looking for intraday. Not expecting much of a change in that volume structure just yet. There's still that continuing debate on the stimulus and everything else and whether anything's actually going to go, but really the paralysis bodes well for the market, as well as the early seasonal adjustment, though end of October has been known to be interesting, historically at least. However, you're going to have to see something that either pushed it so far outside of the norm that people recognize that there's an opportunity for correction or a return to mean, and it's just a matter of going with the trend as it is until we can see that it starts to alter, and we already know what the signs of that would be, and I would be looking forward on that 50K first. But when you're looking at MBI white setups where they're at like that, and then near zero from daily to 50K, even in the 5K setup, it's only a bullish mode right now. As always, though, I will keep updating you with charts as relevant. Trade well. We'll talk in later.